Paying taxes is a reality of life, but when it comes to capital gains, there are smart strategies you can use to keep more of your money. Today, we're going to walk through some of the ways you can reduce capital gains tax when it comes to your investments. Let's get started. First, what are capital gains? Simply put, it's the profit you make when you sell an asset for more than you paid for it. For the purposes of this video, we're going to be talking about capital gains on securities like stocks and bonds, but capital gains tax can also apply to real estate and other items. Capital gains are taxed based on how long you held the asset. Short-term gains are taxed as regular income, while long-term gains usually get lower rates. As you think about what you want to do to reduce capital gains taxes, keep in mind that the type of investment account you choose could mean getting certain tax advantages. Certain accounts, like 401ks, individual retirement accounts, 529s, and health savings accounts, are all designed to have tax benefits. Before you start investing, be sure to consider what kind of account is best for your situation. After you've invested your money, one of the easiest ways to lower your capital gains tax is to hold your investments for over a year. Long-term gains are taxed at 20% or less depending on your income, much lower than short-term rates, which can be in the range of 10% to 37%. Another strategy is tax loss harvesting. If you have investments that have lost value, selling them can offset the gains from your winners. For example, if you made $10,000 in gains but lost $5,000, you may only pay tax on the remaining $5,000. If losses are greater than gains, the IRS also allows investors to deduct up to $3,000 of those losses from their ordinary income per year. In addition to harvesting their capital losses, investors can harvest their capital gains. This means that as an investor, you can wait until you're in a year where your taxable income is less to sell an investment and realize a gain. You might also sell shares in an investment slowly over time to stretch out the tax consequences. Another route to reduce your capital gains taxes is to give away appreciated assets. This can either be to a charity or to an heir or beneficiary. For a charitable donation, you could also potentially receive a deduction for your contribution. If you're thinking about your legacy, gifting stocks can be a valuable tool, as opposed to liquidating and paying capital gains taxes. As of 2024, the IRS allows you to gift up to $18,000 per person per year, including stock. Married individuals who file jointly can gift up to $18,000 each in 2024 for a total of $36,000 to any single recipient. That limit rises to $19,000 each in 2025. In a similar vein, you can also reduce capital gains tax by investing in distressed communities. The 2017 Tax Cuts and Jobs Act created a new tax benefit that can help you minimize your capital gains taxes when you reinvest those gains into a Qualified Opportunity Fund, or QOF. These funds help you invest in distressed communities throughout the U.S. by helping create jobs and increasing economic growth in these areas. The longer you hold your investment into a QOF, the more tax benefits will apply. You also need to reinvest your capital gains into a QOF within 180 days in order to take advantage of the program. If it seems like realizing a capital gain will be too costly and you don't have a way to offset or reduce it, you can also choose to not take the gain at all. If your brokerage has the option, you can use your securities as collateral to back a line of credit, which gives you access to cash without requiring you to liquidate assets, which could lead to capital gains or losses. There are a couple things to consider with this route. The first is that if your investments drop in value, your brokerage will likely issue a margin call, where you'll be required to replenish your account by investing additional assets. Also, securities-based lines of credit can't be used to buy more securities or repay margin loans. Finally, if you want to reduce your capital gains taxes but want someone else to help you understand your options, you can consider hiring a licensed financial advisor to help you understand your tax burdens. An experienced financial advisor should be able to help you navigate your finances and help you find ways of potentially reducing your capital gains taxes. I'm Chanelle Bessette, and I'm a writer for NerdWallet. Reducing your capital gains tax can make a big difference in your bottom line. So, if you're looking to invest and want to learn more about different brokerages and investment accounts, head over to nerdwallet.com. And if you feel like you learned something today, hit like and subscribe.